Hey everybody, how are you guys doing today? I hope you guys are doing well. I'm going to be doing a technical analysis tonight on Shiba Inu, SHIB, however you guys want to call it. Um, and this technical analysis is going to be interesting because I'm going to be sharing with you guys a chart that you may or may not have seen, and it's called the stock market cheat sheet, and you can Google that through the Google image search, and you will come up with this chart right here, the Wall Street cheat sheet, the psychology of a market cycle. And so this is a very interesting chart, and it's a very important chart, guys. If especially if you're new to trading, new to investing in general, this chart has a lot to do um, with the different emotions that people feel in the market. And so it's very important for us to dissect this chart and learn it, especially if you're going to be doing this for a long time. If you're going to be investing for a long time, you need to know the different emotions that happen in the market. And so, real quick, I'm just going to go over it. And this disbelief portion down here is very important because a lot of people feel um, that, you know, in a bear market or when you're coming out of a bear market, they feel like all of the rallies that happen are going to fall. They're going to never work out or they're never going to pan out. And so people really are discouraged at this moment in time. And then, when it starts to really go, people are starting to get a little bit more positive here. And when you get up here into the belief area, you need to be a little careful, because this is when you start to say to yourself, okay, time to get fully in, time to go 100% in, and let's ride this thing. Yeah, when in reality, that mindset of time to get fully invested should be happening down here in the disbelief area and below. And so when you start to see people over leveraging, it's going to happen in these top areas right here. So everyone starts going in on margin and stock options and all of that good stuff. And then you get to the euphoric stage, and this is by far the most dangerous stage, and where the vast majority of retail investors get in between thrill and euphoria. And this is very bad. The housing market was in a very euphoric stage. For example, in the last 6 months, people were paying $100,000 over asking price, and there was just these crazy bidding wars that I would be hearing about all the time, and that just led me to believe that we were in a euphoric stage here in the housing market. And um, we're beginning to see the consolidation, for example, and the prices are starting to pull back, and then you come into this phase right here, the complacency. We just need to cool off for the next rally. It's going to be the mindset in the housing market, but the rally's never going to come. And people are going to start to get anxious, and uh, they're starting to question, why is this dip taking longer than expected? What's going on? We should be going up here because of all of the factors in the market. The housing looks strong. The numbers of the data's coming in strong, but prices are still falling. And then you move into the panic mode. You run through denial. And then you start to run into the panic mode, sell everything. Everyone is selling. It's time to get out. I can't, I can't, you run into capitulation. I can't afford to lose anymore. And then people start to get angry. Who shorted the market? Why did the government allow this to happen? And then, you fall into this depression where my retirement money is lost. How can we pay for all this new stuff? I'm an idiot. You start to question yourself. And you start to call yourself names, and you start to call yourself dumb and all of these things. But you know take a look at this chart overall. And so you see, even in this chart, we see an A wave, a B wave, and a C wave to finish off an Elliott wave count. So it's really cool. But you want to be the guy that's in there buying when people are angry, when people are saying, "Why did the government allow this to happen?" um, when you start to see people really freaking out here and nobody wants to buy, everyone can't believe this, and then you eventually start to run up here and everyone thinks that it's a sucker's rally, when in reality you're going in to make a new high, very likely. So take a look at this chart and then take a look at sheep. Do you see any similarities here? Let me bring it back one more time. Boom. You have, pay close attention to this pattern here, and then the final like sell off over here. You get that three wave looking pattern, and then the final sell off, and then you get the sideways consolidation, and then everybody believes that they're going to be in disbelief over here. Everyone's going to think it's a sucker's rally and that we're going to go lower, but in reality it's just going to go. So I think I spent enough time on that cheat sheet. Feel free to go on Google and search stock market cheat sheet, and that'll come up in the images. So with Sheeb, I have pulled my Fibonacci retracement tool from 0 to the all-time high, and automatically these areas down here, because from what we've seen in crypto, these areas now have become very important. So this is the area where you want to be a buyer. This is the area where people are angry, they're depressed. They think that it's the end of crypto, and everyone's selling everything that they have because they think that this is going to come in and it's going to go to 0. And I've heard and I've seen this over and over again, chart after chart after chart, especially um, the the psychology. You can really see the psychology of the market over on stock twits, and you can really see how there's a lot of emotions that happen over on stock twits, and that's why I stay off of it. But the time that I was on there, I was able to see the euphoria and then the denial and uh, all of those things play out in the comments section. But yeah, you want to be a buyer down here in these regions. And I'm not saying to, you know, go all in right here in this zone. The smart thing to do would be to, buy $100 here, buy $100 here, buy $100 here, here, and here. You know, and just don't buy lump sums of your, don't just come in here with, if you only have $1,000 to invest, don't market buy $1,000 here. Spread it out into different orders and see which one of those get filled. And if they don't get filled, then whatever money you have left over, take it over to another chart, another asset, and then play with it over there. um, and then just let this do what it's going to do. So I'm going to go ahead and break down the chart a little bit further. Um, and, I pretty much just, this is my primary count right here, as far as I can tell. The 4 could go even up to here and then we'll see one last sell off here. So overlapping waves to bring us down for one more run. And so the 4 could, bring us right there. But that all remains to be seen. Okay. We are We This could easily just rally, and we'll never get another low. So if you think that you're gonna be Mr. Smarty Pants or Mr. I'm gonna I'm gonna wait till this area here before I load the boat up. I have been that guy where I'm like, okay, I'm 110% positive that it's gonna come in. We're gonna get that last sell off, and I'm gonna make a ton of money, a ton more money because I waited. And so let me tell you, it typically doesn't work out that way. What usually ends up happening is it'll consolidate here and then it'll just go, and you're going to be sitting on the sidelines, kicking yourself for not getting in. And it's happened to me in I can't tell you how many charts. So um, you want to be laddering your position and have a few buy orders in this area here, and some more down below just in case they get filled. If they don't get filled, they don't get filled. But you don't want to be the guy that is just watching this chart and watching it go to new all-time highs from the sidelines because you were too scared to get in. And I'm going to go ahead and break down the chart here. And so I'm going to move down to the 1 hour time frame. Oh, before I do that, I want to explain to you guys why I am on the Polonius chart. Okay, the I chose this specific chart here because it gives me price history all the way back to April of 2021. Binance, I think, only gives us price history or price action for like the end of 2021, beginning here. And that's just, the more information that you have on the chart, the better your technical analysis is going to be. And so being able to see what happened in this time period is very important to us because this sideways consolidation, we saw overlapping waves here. And take a look at this. As we were selling off here, we were looking for a set of 5 waves to take us into this zone. And so this was a 1, 2, 3, 4, 5. And you see how much of an overlap happened here, and the amount of time that the 5th wave took to go in was probably threw a lot of people off. And so because this chart has done this to us in the past, we could be looking at a similar scenario where we're kind of like sideways chopping here for the next 6 months, and eventually getting this 5th wave somewhere down over in this zone. And so the 5th wave could happen way out here, similar to what happened here. And I'm just speculating here, guys, but fractals on on every chart can help you um, figure out what could be coming down the road in your current trading situation. So this fractal here might play out over here, and if it doesn't play out perfectly, it could come close, and it could help you find a bottoming formation or figure out a bottoming formation for the asset. And so pay close attention to the fractals. They are fractals do show up because of the computer algorithms that are in the chart. So now going to the 1 hour time frame, I'm going to break down the downtrend that we saw. And the way that I'm going to do that is with my Fibonacci retracement tool upside down. And I'll show you guys why. So there's, going off the fact that there's computer algorithms all through this chart, and I'm going to go ahead and speed it up a little bit, but you know, this computer algorithm that shorted Shiba in these areas here is looking to take profit. Oops, sorry. The one that shorted it here is looking to take profit here at the -236 and or the -618. So that gives us 2 lower targets to look out for. They shorted it here, they took profit here, right on that wick, perfectly. So what I'm going to be doing is I'm just going to be taking my fib retracement tool upside down of significant areas where it looks like there was a computer algorithm opening up a short position. We see in this ABC corrective move, we came straight to the golden zone and we derived our targets down below. And so don't be afraid to draw a bunch of these fib tools you see over here. We bounced to the golden zone. We came to the negative 236, and we still have the negative 618 down below. So you're just going to open up every area that looks important. Just draw your fib, a fib retracement. So you can never have too many. And so we got a bounce here. From here to here was a bounce. And from this peak here to this one here, as long as it doesn't as long as this bounce that happened here did not break this high, it's still a valid area because we are downtrending. It made a lower high, so you can still put a fib retracement tool on it because this high did not surpass this high. And I think that's it for now. So what we're pretty much looking for, guys, is we're looking for the dominant computer algorithm in the chart. Where is it? Where are these negative 236s and negative 618s lining up at? And immediately our eyes are drawn to these areas of confluence. So we have this negative 618 there, and we can draw like a little box here, and it might even be just this, but you want to make sure you're not drawing that box too small either. So we still have this major negative 618 down below, close to the 97% sell-off that may still get filled. So you got to keep an eye on that. But just because it's there doesn't mean that it's going to. And going over to the 4-hour chart, we can see that we did come down over here into this shelf, and we're actually still currently sitting on it. We did break a little bit below here, but I'm pretty sure that if we go over to the Binance chart, that probably has more accurate price action because there's more liquidity over there. These negative 236s and negative 618s will probably line up a little bit better to this compared to the Poloniex chart that has less volume for SHIB. And so that's where you want to, once you start to get into these, once you start to break down the chart in these areas here, and this is where the Binance chart will help you, is in the more recent price action, the targets will line up a lot better. And so we are down here between the 89 and the 95 fib level. It would be unwise to hope for another low here. We can get it. We do have the negative 618 target down below, and this Elliott wave count right here that I have in blue could definitely play out. So maybe giving us one more low. The problem is that this is also a very valid Elliott wave count. Can you imagine if this was the 4 here and this is the 5 here, and you're waiting for one more low and it never comes and it just takes off? You're going to be sitting on the sidelines and kicking yourself for not getting in. So that's why I tell you guys that the laddering strategy, where you're buying, you're splitting up your orders, all the way down here to the 97 fib, near the 0 area, is very important, because as these orders begin to get filled, you will eventually build an average. And if your average is over here in this area and you're riding it, to this parabolic move, and I'll go ahead and show you guys my my target for SHIB here. We've got a potential, one sec. a potential play here. Let's say you get in over here and that's your average. Well, there's that 4,500% return, like I mentioned on the Doge video analysis. So 4,500% is the ROI here. Check out the Doge video if you haven't. Take it easy, guys. Bye.